I think we are live. Could that be correct? Yes. Well, a warm welcome, everybody, to this session on how to master financial planning with CFO Connect, the global community for more than 10,000 finance leaders powered by Spindesk. And we're in the middle of the first half of November, so I can't think of a better topic actually to dig into with you guys. And I'm also assuming that you all are quite busy at this moment. So I'm particularly grateful and humble that you actually took the time to discuss this topic with us today. And we have our special guest star here, Saoirse Fahey from Stripe. She's the global head of finance, strategy, and sales. But before I will let her present herself, just wanted to mention who I am. I'm Maria Hedengren, and I'm a venture partner with the venture capital firm 8 Roads, who manage $11 billion and with portfolio companies all over the world. And I actually think we have a number of finance leaders from a couple of portfolio companies of 8 Roads here today. So hello, guys, and the rest of you. Before I joined 8 Roads, I was many years, around 25 years as a finance professional, CFO of multiple companies, growing tech companies primarily. For example, I was the CFO of iSettle, that was later acquired by PayPal. And I was also the CEO of another tech company called Readly that I IPO'd in 2020. But now I'm with 8 Roads, and I'm here today with CFO Connect and Saoirse, and I'm really excited to hear about you, Saoirse, and this discussion. Tell us about you.
Thanks very much, Maria. So I'm the head of finance and strategy for Stripe for all of the regions. So that's Europe, Middle East, Africa, APAC, and the Americas, and then also for our sales organization. I've been in Stripe now for over 3 years, and prior to that, I had been at an Irish SaaS company, an amazing company called Forest, and I was their CFO and their COO. And prior to that, I learned most of my craft at Microsoft, where I worked across finance, marketing, sales, operations, various different roles in various different geographies. We are right in the middle of planning. In fact, I'm missing a planning review right now to be here. I much prefer to be here, obviously. I love the planning time of the year. It's a time kind of to set and sort of try to ensure a successful following year, sort of get alignment across the business. And I actually started way back as an engineer. So that's my background.
Great, thank you. And we have quite a few questions to dig into, and they came from many of you actually who provided us with the great questions beforehand. But before we dig into that, let's do a quick poll. And the question is, have you finalized your 2024 budget yet? Let us know. I think you can answer the poll now. No active polls. I'm not sure what's going on.
I'm seeing over here on the right that 88% are saying 86%. It's an overwhelming that most people have not finalized, which is a few. We haven't either.
Yeah, thank you. I think there's something wrong with my screen, so I couldn't see. So thank you, Saoirse.
Yeah, so it's like 11% are saying yes, and 89%, and that's stabilized, are saying no.
Well, good for you, 11%. I'm impressed. And for the rest of you, keep on fighting in the trenches. But hopefully we'll get some inspiration today to give you energy. So let's kick it off. Now, there will be a Q&A session at the end as well. So you can actually enter more questions during this session, and we'll hopefully have time to address most of them towards the end. It's to your right, I believe there is a place where you can enter your questions. But I mean, if we start high level, what does the financial planning cycle look like at at Stripe? Do you even have a budget, or have you like thrown that out the window or gone to zero budgeting?
No, we haven't thrown it out the window. We actually do a 2-year budget cycle. So we budget for the upcoming year. So for example, right now, budgeting for 2024. And then we also budget for the year after. And it's effectively a 2-year budget. And actually, when I started, we used to do a 2+2. So the 2 upcoming years and then the two following years. We then reforecast quarterly against that. Stripe's business has a relatively long time lag from the initial sort of sale or contract until the user is fully onboarded. And then obviously a longer time lag again from, let's say, product development or product roadmap through to users being fully onboarded. So we use the 2 years to ensure that we're capturing, a decent return on investment on planned investments and kind of to decide where to place the chips. I would say that like budgeting is one of those things where you're constantly iterating. So in Stripe, we're learning, iterating our approach every year and fine tuning it sort of every year. Every year you do a debrief, and there's lots of things that you could have done better on the back of budgeting. What it is, though, also I think is a great opportunity to align across all the teams. So just making sure that that sales can hit their targets with the funded product roadmap, as and where it's laid out. That we have the right ops, sales support sort of, size for what we plan to sell or for the number of users. So just making sure that, all those interdependencies and those interconnected things are making sense across the various different teams and they're funded appropriately. And in my opinion, that's a key focus of the exercise as well as the financial plan.
Yeah, I think that's great that you actually, I don't think I've encountered that before, that you actually do 2 years of really thorough budgeting planning, but it makes a lot of sense. I used to do, when I was operational in finance, we would at least add a forecast for year 2, because, to be able to see the consequences of decisions and planning for year 1. Otherwise, you don't know where that sort of is going to take you. But it makes a lot of sense to me. But what's the pros and cons, do you think, to keeping the budget or to throwing it out as a process, as a concept? I mean,
of a budget, I think it's really, really helpful. Actually, I think then it depends on your size of business, how much any of these things are sort of an effort, a kind of a consequence of how much time does the process take versus the return that you get from it. I think certainly on the financial side, being able to tell how much money you're going to need, what return on investment you're going to need to get, and then being able to land targets across the various different teams. So setting expectations. It depends on the maturity of your business or where you're at. I mean, if you're starting from a total green field, having a budget might not make any sense. But as you get larger and you have more teams involved and more people involved, a budget helps to set sort of a unifying direction and says, like, this is the shape of the business that we're trying to get to, and then helps people then to sort of build their plans in a way that those interdependencies can be worked out. But I think it largely depends on where you're at in your maturity cycle. But for where we're at, or any of the companies that I've worked in, I would say it's a necessity.
Yeah. So that's sort of a segue into another question that somebody asked, which I think is really good. And that is, how do you sort of consider, I assume you have like a strategy cycle. I mean, you're even global head of strategy, so it's perfect. And then, so how do you tie in the strategy with budgeting process and then after that into your performance management cycle?
Yeah, so the two, I think it's a great opportunity to tie the two. So starting with the strategy and saying this is what we're trying to achieve. These are the things these are the planes that we're going to try to land over the next 2 years. So I think it's a question of aligning on the strategy. Then you budget for, let's say, year 1 and year 2 in our case of that strategy, saying this is the pace at which we're going to land that strategy effectively, and this is how we're going to fund it. These are the outcomes that we're going to expect. Then on the sort of operational side, in terms of landing the strategy, because I think a strategy is all very well, but if it doesn't land in team plans, operational targets, the right metrics by team, then the danger is that it won't happen in the same way that you've planned for. So both in Microsoft and in Stripe, what we do is we land, like 5-6 operational targets across each team, and then you make sure that if every team achieves their targets, that would get you to the company target. So it sort of ladders up. Easy to say, quite hard to do, because you have multiple interdependencies, but what that means then is the teams sort of have to have those difficult discussions. So if I don't get X, so if I don't get if I don't have the right sort of design resources, can I do my marketing plan or can I do my product plan? If I don't have the product, can I hit my sales numbers if that product roadmap is as funded? So is that product going to be hitting too late for me to hit my numbers? So all of those conversations have to be had before those targets are sort of aligned and signed off. So yeah, I think the two have to go hand in hand. And then the operational piece with it, if that makes sense. In Microsoft, we used to go down to the individual level, which I think is really hard to do unless you have like a big operational engine to make that possible.
Yeah. Okay. Well, so how do you organize? Do you do like a top-down or a bottom-up approach to budgeting at Stripe?
So if I stand back, I've seen top-down and bottom-up. I've seen sort of both extremes, and in my experience, a mixture of both works really well. So you need some guardrails on the expected shape of the business, and over a specific time frame, and that helps folks to make sure that whatever bottom-up work they're doing lines up with expectations. But then I think it's really important to do a bottoms up, because then you're able to sort of flag or size risks, upsides, investments, the assumptions that you're making. Because at the end of the day, a budget or a forecast is a bunch of assumptions that we lay out that probably will all be wrong, right? It's just the degree of how wrong they are. And then boards and CEOs, also in my experience, are generally extremely opinionated. So getting alignment from sort of a tops down shape is really helpful. And sometimes they don't want to give that, but I think trying to tease them out is really helpful, because then when you come with your bottoms up, at least you can try to work out how to marry the two.
Yeah.
In Stripe, it's probably more bottoms up than top down. And so we do spend quite a lot of time then on that sort of last stretch, working between trying to align the bottoms up with sort of expectations from the top.
Yeah, and I agree with that combination. My experience, I hear a lot of people who sometimes, especially in like rapidly growing companies, and there's a lot of going on, and some people might get impatient and think it takes a long time to do bottom up, and at the end of the day we have to meet board expectations, so why don't we just skip that part? But I find that to get some bottom up helps to get commitment from the organization to what we're here to achieve. Otherwise they might say, well, I never said I could make it with that amount of resource and what have you. So I my experience also that it's usually best to do like a combo.
I think also that where that's helpful too is that if someone is particularly worried about something or has some specific risk that they want to discuss, that it's a good opportunity to bring that, to size it and say, look, I'm concerned about X, and there may be some very good solutions in the business for that, or it may be something that you have to work out how to mitigate all the way through the year, whether that's a competitor, whether that's a potential churn of a customer, or whatever that is. And I think all being clear on those risks or significant opportunities at the start of the year, just to frame all of that, is really helpful.
So how do you organize in, I don't know, maybe you have an FP&A team or like business controllers? How are you organized? Do you have dedicated controllers to different parts of the business when you do the budget, and how does that work?
Yeah, it more or less like that. So that's effectively my team and other finance and strategy teams. So the way we do it is we would have finance and strategy or FP&A folks aligned to the big product teams, aligned to sales, like my team, and then both product and sales in the regions, which will be my team as well. And then each of those folks would work with the business on their parts of the budget, both in terms of excuse me, revenue, margin, sort of customers, and then also on the OpEx side. Yeah.
Well, I just have to say, I just peeked in the chat, and we have people from Switzerland, from Barcelona, from Nigeria, from all parts of the world. So that's amazing. We're 151 people logged on at the moment. So that's really fun to see. And another thing, there is a question in the Q&A here, which ties into what I wanted to bring up next, and that is unexpected events. So the question in the Q&A here was, how do you budget for unexpected costs? Do you include buffers? But overall, if we look at the macro climate today, it's very unpredictable. Lots of black swans popping up, and currency, demand, supply, everything is in flux, right? So how do you think about that when you do budget under these circumstances and the unexpected? Do you include buffers or scenarios, or what do you do?
Yeah. I think there's many ways to approach that. I think we've been living in that sort of highly unpredictable environment for the last couple of years, right? Even if you go back to 2020 and COVID. So for those of us who have been sort of trying to lead budgeting through those periods of times, it's been a question of expect the very unexpected, right, between energy crises and pandemics. So what I would say is that I've seen different things. In Stripe, we definitely would hold buffers. We'd hold buffers at the corporate level, both on the OpEx side and then on the margin side. But I've also seen it work really well where you do different scenarios. So there's almost like a scenario which is this is what we're going to do regardless. Like nothing should disrupt, a very baseline scenario. This is what we would do with everything going super well. So absolutely everything going like in the best possible scenario. And then you pick and say, so the journey we're going to pick is something that's closer to the middle. And with the following risks and upsides. And I think then just being really clear that like forecast or a budget is a crystal ball. You have to be really clear what you're assuming. So I think actually spending a lot of time on the assumptions is almost the most important thing. And once people understand it and you really force them to sort of get into the assumptions and understand the assumptions, then I think then if things shift and change, and the only certainty is that they absolutely will, then you repivot, you reforecast, you go back and you say, okay, things have changed completely from the last time that we talked, and this is what we're going to do. And when I was the CFO and the COO in Forest, that's what happened. So every salon that we were, collecting money from, shut right across the world, and we had to work out what we were going to do next.
Yeah, it's so that's brings another question to mind, which was also asked. And then now we're getting into politics. Do you have different versions of budget, for example, internally towards the teams versus what you show to the board, for example? How do you think about that?
So in Stripe we don't. It's the one budget that sort of is visible up and down. So both from a sales team's perspective, internally, and then also to the board. In Microsoft, there would have been different versions, so internally you would have had the budget or the operational budget that folks worked to internally was had a certain amount of buffer or over assignment versus what you would have sort of revealed to the street. And maybe that's the difference between a company that's public and a company that's not. And then when I was in Forest, it was the same version. We did do some over assignment on the sales side to make sure that we had some buffer. But I think the closer you can get to something that's that's consistent, if you have a, particularly if the company is not that large, if you're talking about different sets of numbers, things get very confusing very fast. And sort of having one set of numbers makes life much easier. And then on the finance side, the ability to cope with sort of 2 or 3 different sets of numbers is tougher. I think then maybe when you're in a public scenario and you're trying to manage a much more complicated set of stakeholders, that's where you need a more complicated set of books to be able to respond.
Yeah, I agree.
Your experience is different now, having taken companies to IPO.
Yeah, but I agree. It can be quite messy if you mix up versions, and I also think it's good for everybody who are part of who are budget stakeholders to know what we promise to the board. And but I've also I'm a fan of over allocating sales quotas, so that's where I've had my headroom. But then you can also work on assumptions and scenarios to make clear. But I have a little story because I always want to overachieve on anything I promise. So when I started at iSettle, this was I was coming from a public environment, and then you always have to over deliver on everything you say, otherwise your stock price is going to take a hit. So that was the world I came from, and then I came into iSettle, which was a venture capital backed company, and I was going to, one of the first things I did was actually present the outcome for the past year compared to budget. And I was very nervous before this meeting. All the big VCs were in the board because we had missed the budget by, I don't remember exactly, not much, but a little bit. And that was like, I was devastated about that. So I was very nervous and getting prepped up. And then when I presented the numbers, they start like, yay, great job. That's amazing. So that's when I started to learn about venture capital, that they do their own haircuts. So they never really thought we were going to achieve that target. So we actually overachieved on their expectations. So yeah, a little bit of politics there. Okay, so when we are on this topic, then what do you think about actually revising targets? So one thing is you forecast and reforecast because circumstances change, but would you also actually change the sort of official target, maybe attached to people's bonuses and things, if you see that your slide in the gap is starting to grow too big during the year?
I'd be very, very reluctant ever to change a budget, because I think that's kind of the starting point for all accountability to a board or to a leadership team. But if you are in a scenario where things have changed really significantly, and how people pay their mortgages suddenly has been drastically affected by circumstances that they couldn't possibly have anticipated or couldn't possibly have managed, then I think you do have to open the conversation. But I would call that more or less, I wouldn't restate the budget, and maybe it's just taxonomy, and more, okay, because of extraordinary circumstances, this is what we're going to do. But and I have been in situations where sales targets have been reset for the second half of the year. So if it looks like a very sizable proportion of people are missing them in the first half of the year, and then the sales targets are reset for the second half of the year, but I would still hold the company budget where it is. That said, when we in Forest at the start of COVID, when things changed like utterly, there was it was such a radical change, we did redo the budget completely and come back and say, okay, it's now March, this is what we had said, this is what we think it'll look like instead, and we'd like to reset the actual budget at this level. And again, actually, the board came back and said, you've no idea what's going to happen in 6 months, so no.
Yeah.
So yeah, I think that's been my experience, but yeah.
Yeah, it's a tough one, because also you want people to still be committed to trying their best. And if the gap grows too big and you won't change their target, maybe they will lose energy because they think it's a lost cause. But I also think it's the balance with the accountability as well, right? But so I also look at, is it external factors that the organization could never have predicted, or is it that we're just not performing well enough? So,
Right.
but it's not black and white. I don't think there is a right and wrong.
No.
So when we talk about the change and the unpredictability and so on, how often do you reforecast once a quarter? Was that how you did?
Yeah. We I think every business I have been in reforecast once a quarter. And the only time where that's been even more frequent was a time in Microsoft where we were reforecasting every week.
Oh my gosh.
Yeah, so that was when things were like during the economic crash, when things went really south, and it was just like, where are we headed? Like, what's happening now? But I think once a quarter is enough. And sometimes it'll be too frequent. Sometimes every 6 months is probably appropriate. Again, it depends on your size of business. It depends on how quickly things are changing, right?
Yeah, and do you do then a bottom-up reforecast, or is that more like, the finance team looking at it and doing some extrapolation and modeling?
Both. So on the sales side, we would do more of a bottoms-up forecast. So they're coming back and saying, this is where we think things will land. That would be, could be even by customer for very large customers, or it would be by territory, by region. At the overall company level, it would be, I would say, more trend-based than bottom-up based.
Yeah.
So you'd look at more, if we're trending ahead, behind, and then how do we think like risks and upsides that will manifest itself. But not trying to do a full rebudget again.
No. So let's do a couple of questions from the audience. So one is, how do you manage scenarios? Through sensitivity analysis, or do you follow as much budget as you have scenarios?
Probably in terms of, so it's two, I'd give sort of two different answers to that. So in Stripe, and to a degree in Microsoft, we would have looked at different macroeconomic scenarios out for the following year. So given that sort of Stripe marries a little bit sort of consumer spending or internet spending, we would look at forecasts for that, and let's say a Moody's or any of these forecastings sort of companies might give sort of different scenarios. And so we would look at those different scenarios and we build them into our budgets and go, okay, which scenario do we think is most likely and which scenario do we want to budget on? But we would review them. Then the second part of it might be a coming at it from an investments perspective. So with no investment, I can do a baseline scenario with, if you give me 100 euros, I can do this plus 10% more. And if you give me 700 euros, I can do this plus 50%. And this is my level of certainty, for each scenario. Let's have a conversation around that. So they're the two different types of scenario budgeting I've seen and been involved in.
Another question I saw earlier in the Q&A field here is regarding currency. I think different companies do that very differently. Like, do you do a fixed currency rate in the budget? Do you do based on December 31st of last year? Do you try to predict looking at forecasts given by different financial institutes? What's your experience there?
I'm smiling because when I came into Stripe first, they didn't really have a currency policy. So, and I was in the European business and trying to explain performance. And then it just used to get horribly complicated when you'd have different, like people would have different understandings of how to manage currency. But what we've settled on is very similar to what we would have. I think it's what a lot of companies end up at in the end. Is you pick a rate generally at the same time as you're doing your budget. So for us, it's an October rate. You budget based on that fixed rate, so that all the performance conversations that you have through the year are kind of independent of any fluctuations in currency. And so you can focus on underlying performance as opposed to your point earlier on external factors, trying to disaggregate, okay, how much of that is euro dollar and how much of that is like underlying business performance. But it depends again on your business. If you have to report, or your business is fundamentally impacted by currency movement, you may decide, actually, I want to go with a spot rate, and
Yeah.
I'm happy enough to report performance based on that spot rate.
Yeah.
So I think it depends on your business. And some of the folks that we had worked with, one of the reasons why we had the debate is some of the folks that I worked with, or I work with, had come from car companies like GM. And so, things would move really significantly over the course of a year if currencies had moved, and they would adjust accordingly. So it depends on the business, depends on, I suppose, what you're trying to solve for. But now we're on a fixed rate, and then we try to disaggregate the currency movement from underlying business performance.
And I think that makes total sense, especially when you look at performance management. I guess if you're like a public company, for example, I guess finance and top management still need to monitor what's the actual number going to look like when you publish your earnings release, which is going to be based on whatever the currency is at the time. So maybe it's good to like monitor both real currency and a fixed rate, but you use it for different things, I guess.
If you see large changes in currency, you quite often see in those earnings calls that people will talk about as sort of a what performance would have been if currencies hadn't moved or had stayed fixed, and then why things played out the way they are. So you'll often see people explain both sides of that.
Yeah. So let's do another question here. Do you give access to the business team to input assumptions, or is that something you reserve for finance? Do you have everything in spreadsheets, or do you have a special FP&A tool system that you use?
So I would say, first of all, on assumptions, we would align all of that with the business. The business would have to be agreed on and aligned with those assumptions. I don't think any of them would want to put them in, but they would definitely have to be aligned. So, how quickly does a user ramp, like pipeline assumptions, product roadmap assumptions, that would all have to be agreed, discussed, aligned with the business. Then, we budget at the moment in Google Sheets. So and we do use a tool called Anaplan, but it's very much at the end of the process, as opposed to we don't use it as a modeling tool. I would dearly love to have a modeling tool where you can model different scenarios, that you could then select scenarios, but we don't have that at the moment.
So Google Sheets is one of your top financial planning tools. So, but what other systems do you use? That's the question here. What are your top 3 FP&A tools that you're using? Maybe also from your experience from your past, like which ones were the best in your opinion?
So I spent a long time in Microsoft, so I would have been a big fan of things like Power BI or SQL. So, and then on the Stripe side, we partner a lot with data science. So we also are using tools like Hubble and like Tableau, but that's more for sort of presentation of data, scenarios of data, and trying to manage sort of very large swathes of data. But I would say in the main, we're still very much spreadsheet based. Yeah,
that's more flexible. And
would have been in Microsoft also, with all of the Excel add-ons, like all of the various different BI tools that help to make the information more digestible and faster to analyze. But yeah. It's probably not the answer you were hoping to hear.
No, there is not right and wrong. There are only like experiences and preferences, right? So we have a question from Claudia here. When you do reforecast, it jumped, each quarter, does that mean that the quarterly sales target is readjusted and bonuses are aligned with the new target?
No. Not, at least not automatically. Generally speaking, no. So generally speaking, we reforecast just to show the trend of where the business will land, but the accountability is still the budget. So unless it's back to some force majeure that you some external factor that has utterly changed all of the assumptions, but generally speaking, no.
Yeah.
I don't know. Like, it'd be interesting to poll people if we still have that capacity and find out if they have done similar, or even if they want to just put it in the chat. I don't know how many people.
Yeah, put it in the chat.
Would it
great.
It's just,
yeah, what's your experience out there? So then we have another question. When should you shift from working with internal accounts to having an internal accounting team? External accounts. Okay, so when should you shift from using like an external bookkeeping firm, and when should you bring it at house? When is the right time, do you think, for early stage businesses?
Oh, I don't actually know the answer. I wouldn't be able to give you an exact answer on that. I think a lot of that would depend on time to close the books. How dependable what you're getting is. It also depends on whether your business is regulated or not. Like, if you're in a regulated business, so I think it depends on a lot of different factors. If you're getting a really good service, and you're really happy with what's happening, then that wouldn't be something I'd focus on. But if you feel like you're unable to answer, key questions about the business because you're not close enough to how the accounting is done, then it's really a judgment call. I don't know that there's a hard and fast answer. Sorry.
No.
I can answer.
No, and my experience is pretty much the same. I think it will vary depending on the business, and I usually find that the combination is good, right? To have like control in house, but then using external accountants for more transaction based things. And also sometimes if you have a good bookkeeping firm, they're also quite good at being up to speed on changes in employee taxes and things like that. So they can be a really good speaking partner and resource. But my pet peeve is to try not be fewer than 2 people in house, because you become very, very vulnerable otherwise to key people dependency. So 2 people at least, I think, should always be in house so that you can back each other up if somebody's sick or get injured or God forbid needs a vacation.
Wins the lottery is my example. I think that's very true.
That's more positive.
Yeah, totally. I think most companies have a proportion of their bookkeeping outsourced anyway, or is that they try to move towards having a mixture of sort of some transactional pieces outsourced and then more of the insight insourced. So even if there's a scenario where you can keep a certain amount of it outsourced and build it up over time, that mightn't be a bad policy either. So it doesn't have to be one or the other. It can just rebalance itself, right?
So Aisha has a question here. What are your experiences with implementing rolling forecasts? Have you seen any benefits in supporting it says R&O's process?
Risks and opportunities.
Yeah. That's an acronym I haven't seen before. So that might be it.
Yeah. So I'm a big proponent of risks and opportunities, and being able to articulate those both at the start of the process and then all the way through the process. I think it can add a good amount of discipline and rigor. And then rolling forecasts, I don't have a strong opinion either way. I think it depends on your business. I think it is really good at any one point in time to be able to look forward a certain amount. Like, if you can always look forward a year and say, this is what this looks like, in theory, it should make an annual process feel a lot less onerous. But I think, again, it totally depends on the business. I imagine most businesses have a rolling 12 months cash flow. So you probably have it in some, probably even a rolling 12 months sort of capital plan. So it probably depends on your business, and there are elements of your books that you should always have rolling, and then there are probably elements that will be more tied to a financial year or a performance year. What do you think?
No, I'm a big fan of rolling. Of course, you need to keep track of where you're going to land the year or the quarter, but I think there is a danger of losing sight at what happens after. So you can be really proactive, and if you need to change something in how you approach your business, because something big is coming in Q1. So I think that the sooner the better that you can implement the rolling. It doesn't have to be very bottom up, onerous, detailed kind of thing all the time, but kind of high level view. I agree with that.
One of the things, one of the things that I have seen work really well is this concept of, you sort of have Q1, Q2, Q3, Q4, quarter one, quarter two, quarter three, quarter four, is always making sure that you are planning for quarter five.
Yes.
So that you don't, so it's not as if you get to the end of the year and you're like, okay, we're done. What happens next?
Yeah.
So I think you want to avoid that. So I think that's where rolling forecast is really
agree. So are OKR cycles fully aligned with the forecasting cycle? Is a question from Wolfgang here.
I didn't understand that, sorry.
OKR, are your OKR cycles, are they fully aligned with also the forecasting cycles? Is there like a link, or are they like independent creatures?
They are, but I would say we still haven't worked out how to do them in a slick way, if that makes sense. So the theory would be that you set out OKRs for the year along with your budget and your strategy, and then you have them for each team over a certain size. And then as you reforecast, teams are able to say, okay, this is how I foresee this particular OKR playing out for this quarter and for the end of the year. So you can kind of go like, we'll be all green, or of my 5 OKRs, 3 will be green, 2 will be red. This is what I'm doing about the 2 that are red to try to throw them back to green. I do think that for that to work, you have to have a lot of people bought in to investing time in it, to driving it down to teams, or else it either can become very, very hard to sort of keep moving. And then the temptation, sometimes I've seen teams with like 150 OKRs.
Oh.
Yeah, I have seen that. And I think as long as you can count them on one hand, that's probably the most important thing, because I don't think the human brain can manage too many more than that. If you think about somebody waking up in the morning and going, I've got these 5 things, my team has these 5 things, how am I tracking?
Yeah. I'm also a big fan of non-financial OKRs, and more leading sort of goals. So, I come from subscription-based services, for example, where reading time was very important. So it was about how do we increase reading time in the next quarter of all our users and things like that. So, well, I think there are still a few questions. I'm not sure. We have one. Let's take one more. This is going to be the last question.
Okay.
Would you rather set up realistic targets, even if less aggressive, or bigger targets with sort of poorer achievement, but to sort of, I guess, push and drive, to push teams harder to achieve bigger goals, even though maybe it's a bit of a stretch?
I think it depends on the context very much. My tendency would be to do the second rather than the first. But to your point earlier, if then that means that after 3 months people are very disillusioned, or it feels like the budget is not achievable, then that's not helpful. So I think going for something that's ambitious but realistic is probably what you want to do, and then add over assignments then on top of that. So for example, from a sales perspective, making sure that there's some over assignment in the system to make sure that you can hit the total company number. And the other part of it then is just making sure that that realistic budget is something that people are, when I say people, let's say the CEO or the founders or the board, that they would consider that a success at the end of the year. Because the last thing you want is that we've hit the budget and everybody is like, that they didn't really consider that success. So I think it's a question of having to work across your stakeholders, to understand what's the right balance of, like, if we hit this, will people consider it? Like, it mightn't be a blazing success, but it's like, yeah, we feel really good that we achieved all of these things. Or no, we hit that and we're still going to be like, feels like we left something on the table there. What do you think?
Yeah, I think it's a hard one. It's like finding the elasticity, where you're pushing, but not until breaking point, right? It still need to be engaging and make people think, yeah, we're going to do it, and not be like, I ain't doing that. So,
True.
I mean, it's hard. I think it's just people experience dialogue, I guess, is where you hopefully find the happy medium.
That's almost like we've talked almost like budgeting is a craft. I think sometimes it's an art as well.
Yeah,
so
totally.
maybe that's the art part of it.
Yeah, I agree. Well, budgeting is an art. So I think that's a great ending there. So thank you everybody for joining us today. I hope you found it useful and inspirational, and that you taking some ideas back. And this session has been recorded, and you will be sent details on how to access it via email after this. If you want to go back. And if you're not already a member of CFO Connect, we hope you want to join. I mean, I've had many CFO positions in the past in my career, and having access to something like CFO Connect would have been really valuable at the time. So I really can recommend that. And there is a link. It's supposed to be linked in the chat, I think, on how you can join. Yes, apply to join CFO Connect for free. So you don't want to miss out on that opportunity. And thank you everybody again, and good luck. The 11% that are done, you can lean back, and the rest of us, I guess, we have to keep grinding. Thank you, and have a good day.
Thank you.